Hello, hello. How we doing tonight, guys? I just gotta say, I fucking love that song. I'm doing great, thank you. Yeah. It's been a good day. It's been a good day. And we have lots and lots to talk about. I get a quick confirmation on sound. You guys can see my screen as well. I'm testing out, by the way, some new virtual camera frameworks, which is what allows you guys to see my camera and my screen. So slowly but surely, we're gonna get there. Awesome, awesome. Well, on a day like today, we have a lot to talk about. But why is that? Right? Why do I say there's a lot to talk about? Well, because it was a pretty pivotal day, right? We talked about it at the start of the week. I believe I also mentioned it in my announcement for this week for Rise Weekly, or perhaps not. But today, for me at least, I was going to be trading before FOMC. I'm testing out some new data-backed frameworks, so we're going to talk about those as well. Some pretty cool stuff here that might eventually lead to some rule changes with the Rise model. So we'll talk about that a lot, but more importantly, it was the highest impact news of the week, right? We are at the third week of the month. We are at a key area within price for reversal, right? We talked about it. I never like to call reversals based on a higher time frame. But when we see things like that, it gives us insight into what's going on. For me, the insight that was grabbed from this, and we'll zoom in for this one, is that first of all, what did we want to see, right? What did we discuss that we wanted to see? Well, we wanted to see the inversion of this gap. And of course, for me, I want to be implementing everything. So let me bring back the zero here. Everything by that I mean the volume imbalance, which is last week's new week opening gap. So you have all of these, and once you close above that first quarter, that's our first signal of being bullish. Then, of course, no high impact news on Tuesday. I expected to do bullshit. What did it do? Well, it didn't do bullshit. It was actually a very clean move after taking out important liquidity, right, which we can refer to as external range liquidity. We retraced into the discount of our most recent range, and we didn't have a discount in efficiency here on the daily. What I tell students and just anyone that uses this is that when that happens, you're going to look at your daily range. So this is the same range, just better anchored. And you're going to look at your first discount in efficiency in the 4-hour. Right here, I don't see a good one. Oh, never mind. Right here. And even better is this swing low. But since these are relative equal lows, I'll use both. Once this level is taken out, you can look for reversals. And what did we see today, right? Which is Wednesday right here. We just opened a new day. So let me actually just remove this. These are our 4-hour candles of the day, right? You have the 10 a.m. to 2 p.m. And then you have the 2 p.m. to the close of the day, right? What did we see today? We opened, we went and formed a low. Now we see candle to candle SMT. We'll look on the lower time frames here in a second and find some nice SMT as well. But the main aspect I want us to focus on is this. So this is actually a tick higher. So it forms SMT at this low. Why am I on a 4-hour chart? As I said, the daily didn't have a discount in efficiency. So in cases like these, I want more information. And you guys can ask, I mean, I see Seb in here, right? It's very rare that we're going to go down to the 4-hour to find our bias, to find our higher time frame framework. But when it does, I like to showcase it. So this is SMT I'm showcasing, I believe, with that swing. No, so it's actually with the first one, but we still have the same exact SMT here. So we'll mark it out with the more recent one. But you have some very nice SMT here going into the next day, which gives you a beautiful power of 3 framework of open, accumulation, manipulation, into distribution. And of course, the main goal for me was to invalidate this. So to close above this line. I wasn't looking at any premium objectives here. I was not necessarily expecting it to reach all the way up here, which is our logical target of liquidity, right? Which is a extreme of this range. But if we look right here, we did reach it on ES. So I'm going to leave these levels here so that when we go down the time frames, we'll actually be able to notice the timing of when it happened. And as you can see, it was just after FOMC. And as soon as this level got taken out on ES, which forms SMT with NASDAQ, we saw a deep retracement into the range to, of course, continue to a close. Now, the reason why I was testing trading before the FOMC news, right? So this is something I talked about and that I was going to be doing, is because I rarely have enough time to find a successful trade after FOMC. So that last hour of trading usually doesn't lead to the biggest trades, and it's usually just some small trades that aren't really worth my time on the charts, right? Your time is worth money now. That's what you are as a trader. So when I noticed these things, I just decided I wouldn't be trading it. But now I've had some pretty nice data telling me that perhaps I should trade it. But I have very specific frameworks in mind. First of all, it's all related to the 930 open. So I'm not looking to trade anything other than the 930 open and or the 2 p.m. volatility injection. So I have a trade opportunity in the AM, then I have a scalp opportunity in the PM, followed by another scalp opportunity after FOMC. So this will be my new framework that I'm testing. Of course, with just one FOMC a month, it's kind of hard to test, but I am back testing it slowly but surely. I have a lot of different things on my plate, so I can't really look at this. But just on our 15-minute chart, right, what do we want to focus on? Always the same thing, the structure. We open, formed a low, okay, and went back to a high. Now we have a range that we can now retrace in to form a manipulation and then expand to a distribution. Of course, retrace to a close. Just a very beautiful structure for a day. And of course, you have SMT here that I was discussing. Here, I'll mark it out precisely. I believe it was this one I was looking at. No, even further back. So this one, I mean, there doesn't seem to be actually any 15-minute SMT because there's a lot of divergence at these levels. So it's sometimes a little hard to spot after the fact. Well, there you go, actually. There we go. We found it. So we're looking at, oh no, because these are both higher. So it would be this one, which is higher here, and it is also higher here. Okay, so we'll look at 1 minute SMT because on the 15-minute, I can't find any clear SMT. And there might be some very specifically if I zoom in, but we don't need that. That's the truth, right? Because you have your structure, you can trust to go to the upside, and more importantly, when do you start trading? Well, for the 930 framework, it's going to be at 930. Let me just remove the opening range here. Please, there we go. And I'm also going to remove Asia and London because the framework is entirely based on the 930 Judah swing on FOMC days, right? I'm not looking at Asia high and low, even though we have some nice liquidity levels, because I'm not expecting it to do what it's supposed to do. It's going to wait until after the news to do that. It's going to wait until after FOMC. So what am I looking for? Well, at 930, I want to see a clear Judah swing. I want to see that confirmed by SMT, and then I can look for a trade. For example, when I see 930 open and consolidate, well, I can sometimes frame this upside move as manipulation if there's recent SMT. There isn't in this case. But then you get a huge move lower that forms SMT at the bottom of the range. I mean, I don't really have to showcase it too much past this, right? We have SMT here. Let me bring my mic a little bit closer so I can actually see my templates. I believe it's somewhere here. There we go. So some very nice SMT at those lows, and not at the top, please, at the bottom. Awesome. Some very nice SMT at those lows, followed by what? Well, for the rise model, I need a breaker block, which is actually the candle to the right. Let me mark it out correctly. I need a breaker block, and I need an overlapping array to that breaker block. Now, before you guys tell me I'm cherry picking the good entry here, I'm going to show you guys that this inversion fair value gap was not yet inverted. Okay, so that's not the entry later. The first entry it gave me would have been right here with the 3 PDRA stop loss. Actually, that's pretty good in a case like this. So you have your fair value gap, you have your inversion fair value gap, then you have another fair value gap and an inversion fair value gap. You have a lot here. It gives you quite a wide stop, but whenever you have even more PDRAs inside of it, I can just trust it. Of course, the good stop loss in my case would have been this, because when you have a fair value gap that forms past another fair value gap right here, This is what we call a balanced price range. It had a sell side imbalance and a buy side imbalance through it. And these I want to hold always. So even if we look below where you had that bullish fair value gap formed, that's also a BPR, a balanced price range. And I want to see that hold instantly. So I don't want to see price trade below it. This is when you're extremely bullish, that happens, or extremely bearish, of course. So you have a huge manipulation, and then you have a full reversal, and that forms these balanced price range that I want to see price not even trade to most of the time and just explode on top. So it's all about speed of the delivery. This is a concept that you do not need to know, but it led to me having a very much tighter stop loss today. So if you guys want to learn it, it's very straightforward how I personally utilize it. It's all about the mentality of what this tells me. So us moving this far, this quick lower to then fully reverse that showcases that we're very bullish. We just reversed this whole move like it was nothing. Okay, well, I don't want to see price trade back down into this range. So I can't remember what you said about this, but you are okay with a trade before news with SMT? No. So just to get back to what you're meaning, Perez, today has no relation to when do we trade before news. For example, if I had 10 a.m. news or 9:45 news, if the New York Open forms a Judah swing with SMT, I can trade before that news. Yes, but this is not the case for today. For FOMC, we have very specific rules right now. You're only going to be trading after FOMC, but I'm looking to, well, basically I'm testing out some new frameworks. So I'm sharing the results of those frameworks with you guys today. I'm testing out, this I talked about in the Rice Weekly announcement. I said I'm testing out a few things. Yes, using data from Rice Statistics. There we go. So looking at for more opportunities on a FOMC day. This is what I've been testing out, back testing a little bit, and today I traded it. So I'm sharing this with you guys. I basically found some data that told me that trading before FOMC is usually very directional between specific time periods. So I'm testing out if I can have successful trades on days like this, where I could literally be in and out before FOMC and then just forget about it. Because FOMC, I very rarely get setups, and when I do, they're usually pretty bad. So I'm looking for better ways to engage with a day like this. So yeah, I'm just sharing the results of these with you guys. And see, we're back into our higher time frame fair value gap with our quarters and stuff. But at this point, a clear objective for me was the external of the range, right? That blue level right here. Let's actually mark out the same level on ES so we can follow along, which is the external of, wait, what range is it? No, the blue line is the top of the fair value gap. Okay. So let's mark that out so we can see it on both, because I want to see price trade aggressively past it, right? That is my one and only goal, because I'm bullish. So I want to see price disrespect higher time frame arrays. Well, let's be honest here. Your first objective would not be all the way up here, right? Because you're already up too much R. And more importantly, you're looking for an important liquidity level. Well, current high of day has already been taken out at this point. Now this high doesn't offer enough risk to reward. If we go down here though, to our 2 and 2.5 standard deviations here, not being picky, not targeting the middle, not targeting the top, just targeting 2 standard deviations, you have enough risk to reward here. Now in this case, I really would want a partial at this level here. So now this would become my break-even line. So as soon as we close above this, so not just trade above it, but as soon as we close above it, I want to go break even on my trade. And as you guys can see, very successful here. And then I just held break even. Got pretty scared here, not gonna lie to you guys. But then once we got up here, we reached 4 standard deviations and almost reached the high of this fair value gap. If we look at ES, price was already trading inside that fair value gap right here. So this was very scary for me. I did not take profit here. So as soon as it went back up and I saw the inducement of this level, I was very happy to close my trade, right? Because truth is, I should have looked to take profit at another level somewhere here, right? Literally find a reason because I'm up enough and then just have a tiny position. But at this point, I still had 3 contracts on from my 5 original contracts. So basically I should have partialed more. A little bit of a management mistake on my end. But see, a very nice framework based entirely on a 930 Judo swing that's confirmed, gives you a setup, standard deviation and objectives. This is a framework that I'm testing specifically for FOMC day. This is, by the way, if you guys like this, this is literally a model that I've known for a while now. It was actually my first ever model that made me profitable with ICT trading. I was trading an open Judo swing to a continuation from 10 to 11 a.m. And see, in this case, if we look at 10 right here, you were all the way up here. And I would scalp some tiny moves myself. But very, very good model, very good framework. You guys will notice that I trade the Rise model. Does that mean I hate or disrespect every other model out there? But it might be arrogant for me to say it's the best model. What made you go away from it? Not enough return. Didn't make me enough money. That's the truth. I was not satisfied with the return. And, well, if you guys watch the model video on YouTube for the Rise model, right? My mentality when making a model was all about consistency, but also I like being right. And when I see what's going on in the markets, I want to be able to trade that. So what can catch the most amount of moves with the highest win rate? Breaker blocks. Okay, how can I predict those moves and trade those moves with the highest EV, which means the highest money return, right? Keeping in mind, I want my consistency up there. Well, first premium, first discount, and efficiency, standard deviations of breaker blocks. There you go. Now a model has been made, right? It's stupid how simple it truly is when you look at it. But what's hard is not this. It's being a risk manager. It's going up there and manually clicking those buttons. That's the hard part, right? And that's why I'm here every night with High Impact News to give you guys a helping hand. But for me, for the day, very simple. Target here. Didn't take a partial here. Had to live through this retracement and then took a partial. I believe it was right after we went down here. I just saw this retracement. I saw we induced this high. We already reached 4 standard. Just closed my trade entirely. Even if you just took a partial here or here, you would have gotten stopped out break even right at the news. And truth is, I don't want to be in the trade at the news. Not ever. And it's not the news, right? But FOMC, this is something I've talked about on Twitter, by the way, and that you can find in this Discord in the resources channel of our Discord, right? You can go to the Rise trading model, scroll up a little bit, and you'll find the economic calendar thread. So these are my rules. FOMC, we have a first injection of liquidity at 2 p.m. when the data releases, and we want to wait until 2:45 actually to look for a trade. And in this case, 2:46 was your entry. So very, very simple framework. We're going to talk about it in a second. Sorry about that, guys. But I didn't want to showcase my morning framework. The other thing I can look for is I can look for scalp between 2 p.m. and 2:30 because we usually just follow the move from 2 p.m. So that's simple. 2 p.m. bullish candle. Okay, look for continuation opportunity, which in this case, you actually had a breaker block form here. You had an entry here, but you're only looking for a very quick scalp. So I'll still showcase it. This is not something that I've traded, and this is not something that I think I'll be looking to trade because I don't like it. Right? It is that simple. Your stop at 3 PD arrays will be all the way down here. That's a big stop. But you're looking for 1.5 R, just like this. So this is just data frameworks that I like to be testing here. But my goal would have been to be out by 2:30 here. So you would actually be out right here in barely little profit for some nice consolidation. But still, if you look at how many points it offered, almost up to 50 points. Testing some frameworks, as I said, just some stuff I wanted to share with you guys as that's what I'm working on. Let me remove the 4-hour opens here. They're pissing me off on a day that we do not need them. Now, looking at FOMC after 2:30, right? This is where the conference starts, in case you guys are unfamiliar with how that works. So let's find back 2:30 here. Now, to look at our normal rules, which is the rules that I've shared since, I believe, the last 6 months. When you mark out data high and low, how do you see it? What do you mean? What do you mean, how do you see it? And Magic, by the way, nice to see you again. I think I haven't seen you in here for a while, so glad to have you back. How do I use it? Data high and low for me. For example, on a news like FOMC, I don't anticipate back and forth reversals. So I'm not going to use data high and low at all, right? But I use the data that's in Rice Statistics. So I look at the economic news analysis. I look at the probabilities of those levels being met. And also, if you scroll down in the advanced analysis tab, whereas you'll find the average move sizes where you'll find reversals and continuations. So I use those sizes for moves. If I see us expand past a higher certain amount of points, and that's my amount of points for continuation, but not enough for reversals, I'll look for continuations. Overall, they are very high probability frameworks up to 90 minutes after the news. But these are the kind of stuff that I like using. Let's say I'll trade a PM trade and I'm looking for my target. Well, it's a very high probability statistical target. Usually, I just don't like using that in PM session news. And for FOMC, it's very low probability. So you'll find that in the app as well. It's much lower probability than anything else. You have a very high probability of having a continuation after the 5, 15, 30, and even the 45 minute. This is all data you can find on Rice Statistic for us, but I wanted to give you a quick insight since we don't yet have any tutorial series. We will at some point, but for now, nothing. What we focus on here is truth. Power of 3 is very clear at this point, right? We look at this red line. We're clearly bullish. I'm not going to look for a reversal because as we just said with Ferez, right? We expect continuation from FOMC. Okay, well, what am I going to do? I'm bullish. I'm looking for longs. My target, right? Our higher time frame external of our range is up there. So I'm going to look for longs. At 230, this is where I can look to build a trade idea. So we see it went down, then we have a continuation. We see price retrace into our range and continue. This is a great sign. And at 245, we can look for a trade. And at just after 245, you have a breaker block. Let me just mark out my standard deviations in advance because I'm lazy. Where's that? Breaker block. There we go. So you have your breaker block and you have your unicorn efficiency. And we have a volume imbalance. Let's just include that little guy. And right at 246, so right after you can look for a trade, that's your entry. So no need to think on this one. It was really just wait for the X time and click the button. Now, 3PD array stop loss rule. There are none. For me, I think I talked about this probably last week or the week before about the implied fair value gap. So whenever you have two wicks like that cover a full candle body, I use a midpoint of both wicks and I see this as a fair value gap. I personally counted that today. So it brings my stop a little higher because as you see, there's another one right below. So for me, my stop was really here. It's a little weird now, looking back at it. I should have probably, just for you guys' sake, not even mentioned it. But I don't know. I like to be more transparent on that end. But if we don't think about these implied fair value gaps, we have a fair value gap right here, then the order block, and it's the invalidation point of the breaker. So that's your final level. And look, you have some very nice return on this trade no matter what, right? With up to 2.7 R. As I said for myself, my target is going to be when there's SMT here, that's my sign to get out. Get out fully. Why? Because it's the end of the day. Or you can take a partial. Truth is, especially during that time window, which I'm looking at the last 15 minutes, so 45 to 3 and 3 to 3:15, right? So that 30-minute time window, I'm looking for a reversal. That's where I'm looking for the day's retracement to start. And as you can see, that's clearly what happened with FOMC, all based on data. But for me, I'm waiting for SMT. So as soon as ES takes it out here on this candle at 1507, this is where I'm looking for a partial. So let's just let's just look at the close of the candle because that's where you can see that it took it out. And that's where you'd look to at least take a profit. I see I'm up 2R on this trade. Just call it a day, right? I just told all of you guys, right? When we see when we're trading FOMC, we usually don't have time to have a very large trade. This is a very nice return, few handles, quite a large stop. As you can see, my stop, not that much better as a return, right? It's a small trade with FOMC. But you had some very nice return, which is why I'm testing out the morning stuff. Truth is, I traded this today because I'm testing the morning. But if my morning data with the 9:30 trades works well on these FOMC days, then I'm just going to start trading that on those days. So I'm letting you guys know. I like to keep you along for the ride. As you may have noticed, I like trying out a bunch of different things. I like testing out different things. I love data. So this is what I do. And of course, now starting at this point, you have SMT for full reversal. And no, I'm not going to talk about a potential short here because you have less than an hour remaining of trading a day. And my average trade lasts an hour, right? Not to my partial, my average complete trade lasts an hour and 21 minutes, if I'm not mistaken. I looked at it very recently. Been messing around with TradeZella. I think it's a great platform, great way to share your results, right? So definitely excited to look forward with that, but very straightforward trade. Uneventful FOMC. I expected more. Is there a lot of risk trading micros with the news margin increase? I know lots are terrified of minis with the margin increases. Yeah. Well, there's always going to be risk. And you have to be sure that you're always within margin requirements. That's one of the main things that as prop firm traders you don't consider ever, and you don't have to. But when you go live and then you're like, what the fuck is this thing margin? It's the amount of money you need in your account to be able to trade your position, to be able to hold your position. So I'm very far on margin because I deleverage always. So I always have very small leverage, and I never want to trade during news. That's just one of the rules of my model. And if I'd ever want to, I'd place, sorry about that, I ate quite a bit. I'd place such a small position, it wouldn't matter when margin increased. So for me, it's not a problem at all. Micros or minis, doesn't matter. If you're trading a small live account, you might want to do just like I do with the Rise model and just not trade near news, right? You're waiting 10 minutes after the news. You're waiting until after the news also. Right, nice to point out. Never trading during news. I never hold a position during news unless I'm on prop account for prop accounts. I never did it on my live account, and I'm never going to. That's the truth. I don't like doing it. It's adding risk to something that is already risky, right? Trading, and it's unnecessary. I don't need that extra 2R if it's going to cause me to perhaps lose 20% of my account, or even 100% of your account if you get margin called. So I'm not messing around with that stuff. Definitely not. Do we have any questions about the day? As I said, not much I can say on the trade like this, right? Because I'm still creating this framework, finalizing it, testing it. But I'll definitely keep you guys updated, right? We'll speak more about it in next month's FOMC. By the way, has the Rise model changed from the YouTube videos? No. Same thing. Same thing. What you'll see in the video that I posted when, actually, I'm thinking about that. I have no clue when that was. I feel like that was such a long time ago. I'm checking right now. It was posted, please load, 10 months ago. What the fuck? The 13th of May. Wow. That's something. How did you get rid of the blue vertical line on TradingView? Oh, right click, settings, and symbol settings. It's the electronic trading hours background. It's just weird because this was already a thing, and I had that just 0 opacity, right? So I can bring it back. You can have it on your chart. Like if I want to know electronic trading hours, well, I know that it's these ones, right? But personally, I always had them off, and I don't know, they showed up for some reason. I think it was on the daylight saving switch. Never mind, he's quicker. Yes, sir. Don't change something that works. Well said, Alex. But I mean, it's more than that. You guys know I have access to 1.9, I believe we're at now. 1.9 billion data points in the Rise Statistics app. And I'm trading this. And when I shared the Rise model, I said it. It's a model based on data. I knew the data. Now, how can I trade it best? There it is. Do you see people with this level of consistency? And of course, I'm not sharing results right now, and I'm not trying to advertise it. So, of course, it's not going to bring people to the Discord, for example. And that's not my goal. Do you see me selling any sort of mentorship here? No, because I don't want to do that right now, right? You'll see a few private students, which I have taken in the past. But the truth with something like this is, it's so simple. I just have one YouTube video and you can understand it. Then you backtest it to understand it better. I do price action reviews all the time. I mean, I don't know where I'm going with this. You guys might be as lost as I am trying to explain this. I just want to say it's a model based on data, very simplistic, mechanical approach that just provides you with a shit ton of return. I mean, what can you ask for more? At least I have enough with this, right? And if you like this model, just stick to it. If you don't like it, find something else. Stay in here if you want, but find something else, right? You have to find a model that fits you. For me, I like being right very often. So I needed a model that was consistent and that could catch almost all the moves. There you go. This morning, I was looking at a live with Top Step Trader and most of their trade were stopped. I looked at all the unicorn and there were all wins. Yeah, that's a fun one. That's a really fun one. Because a lot of people, well, I mean, I don't want to bash anyone at the Top Step Square, right? They have some great traders who've been doing it for far longer than I have, right? Far, far longer. So I don't want to talk bad about them. But just in general, a lot of these traders trade the same way. And they trade based on their experience that they built up. So they'll catch the big moves. Some of them have like a 20% win rate and take some very big trades. And some of them are just very small scalpers that have a super high win rate, right? They all have different models, but it's not simple in my eyes. That's why I don't like it. I don't watch it. It's because it's not simple. They're looking at like 20 different things. I don't like that. But once again, it's all personal preference. Some people prefer to have 3 EMAs on their chart, 3 moving averages, and just trade crossovers of that. And you know what? I can tell you guys, I've been testing some data. It works. It works. There's nothing more I can say. Here, you want to know something even more? Let's pop this guy in. Where's Trinity? Something as simple as this, right? Let's bring it in. It takes a while to load. That's because when you're running private scripts, right? But this is a very simple strategy. And as you can see, I was a beginning coder. Nothing as pretty as before. Let's just make those. Yeah, they're tiny already. Let's make those not large, small. But what you see here is very simple. It's moving averages. Moving averages give you your bias. Crossovers of things you see behind the scene give you trade entries, right? And returning to it sometimes. Like, see this? This tells you this is an A++ long. It works. A long, these are shit. A+ long, a little bit better. But if you only see, I think I had something in there to only see A+ stuff. It's been a while since I pulled this off. But what I'm trying to showcase is that something as simple as this, like, see, just look at the big MA, right? And let's remove everything else. Let's remove the signals, remove moving averages. Oh no, that's what I want. Okay. So that's all we want to see. This big moving average. So just one moving average. And see when it turns from red to green? There we go. You would have made money here. You would have made money here. You would have made money here. Or, well, barely any. You would have made money here. You would have made money here. See, it can be so simple. But the part that's hard is being able to manage it for yourself. And that's what you need to learn. And in case you're wondering, no, this did not lead anywhere. I was just messing around with moving averages. Like 30,000 a week with this indicator. Yeah. Yeah. You know, at some point I'm going to be a sellout, guys. I'm telling you in advance. At some point I'm going to sell myself out and start doing all that bullshit like Ferez just showcased, and showing how much money I make and telling people this is what you can do with the right statistics and getting people to use it. But I'm not there yet. Wow. You that is a great picture to showcase it for us. I'm not there yet. I'm not there yet. I'm going to have to be at some point because that's the direction I'm heading in. But for now, I like being in here with 5 to 15 of you guys just reviewing price. And yeah, 100 views on YouTube, probably like 75, 80 people. I love being able to help a small group. I feel like I can have more of an impact. So, I don't know. I'm having fun there. Do you guys have any final questions related to charts? We got very, very disconnected here for a second. But if not, we're going to call it a night. Fair enough for us. That is true. All right. Pretty clear. Well, always my pleasure, guys. You all have a great night. We'll see each other tomorrow, I believe. Wait. Let me double check that. I need to close this off correctly. Yes, we'll see each other tomorrow for the final PA review of the week. All right. Have a good one, guys. Bye.